Household debt has long been a concern for Thailand, impeding consumer spending and hindering economic growth. According to data provided by the National Economic and Social Development Council, Thailand's household debt reached 15.1 trillion baht in the fourth quarter of last year, marking a 3.5% increase year-on-year. This debt accounted for 86.9% of the country's GDP. The rise of household debt can be primarily attributed to the purchase of real estate and personal loans. As of the end of 2021, total household debt stood at 14.6 trillion baht, which is equivalent to 90.2% of GDP. The debt to GDP ratio for 2022 remained high at 86.9%. Despite the decrease, the household debt ratio remains relatively high and the rate of decline is slow, suggesting it will take considerable time to reach the Bank of Thailand's target level of 80%. The central bank has identified a debt level exceeding 80% of GDP as potentially detrimental to long-term economic growth and a risk to the country's financial stability. Considering the current economic climate, inflation rates, and interest rates, the Bank of Thailand predicts that without implementing debt restructuring measures, household debt is expected to tally at 84% of GDP by 2027. Kasikorn Research Center expects Thailand's household debt to GDP ratio to decline to 85.5% to 86% in 2023 because of Thai GDP expansion and retail loan repayments, especially credit cards and mortgage based on seasonal factors. In addition, mortgage borrowers might have received extra income or bonuses in the fourth quarter of last year, then paid off loans in the first quarter of this year. The country's household debt increased significantly from 59.3% of GDP in 2010 to 89.7% in 2020, peaking at 90.2% in 2021, which was mainly attributed to the impact of the COVID-19 pandemic. The Bank of Thailand wants to reduce the household debt to GDP ratio to a ceiling of 80%, in line with the Bank of International Settlements standard. The forecast for a falling ratio is partially attributed to rising interest rates, which weaken demand for new consumer loans. Krungsri Research, which is a unit under Bank of Ayutthaya, expects rising interest rates and swelling household debt to pressure household consumption, particularly for low-income earners. Vulnerable households, meaning those with a monthly income below 50,000 baht, shouldering expenses of around 30% of total income and deposits, will have higher risk of debt repayment with rising interest rates. This segment represents 85% of total households. Krungsri Research said, given the tight liquidity among vulnerable households, we expect they can pay off debt for only 3 more years. Higher income households, defined as a monthly income above 50,000 baht, with expenses of 6 to 17% of total income and deposits, will have a lower debt repayment risk, assuming higher interest rates. The debt repayment capability of this segment could last 5 to 10 years. This group accounts for 15% of total households. The Federation of Thai Industry said that high household debt is likely to lead to more NPLs in the automotive sector, leading to more car seizures as purchasing power slips amid the high cost of living. Auto and housing loan problems are evident among Gen X and Gen Y customers, but they managed to own the assets after receiving help from the government, notably the extension of payback period during the pandemic. When the assistance measures end, people will begin to live tougher lives when various types of debt keep rolling in. These problems exist because the Thai economy has yet to fully recover from the pandemic. Used car dealers will bear the brunt of financial institutions will apply stricter criteria for loan applicants. Vice President of the Thai Travel Agent Association said household debt will affect the tourism industry, particularly outbound tours, as this segment has a limited budget and may consider pausing their trip plans or traveling within the country instead. Tourists with high spending power will not feel the impact of a slow economy. The number of outbound travelers this year is expected to recover to 50% of the 11.2 million recorded in 2019. While travelers on budget tours did not spend as much per person as the premium segment, the tour industry still felt a severe impact when they stopped, because this segment contributed to a huge volume, generating income from many tour operators and those in the supply chain. For instance, airlines need a massive number of passengers to effectively operate under each flight, while hotels require a healthy occupancy rate to fill rooms. Budget travelers will start to recover by next year when travel costs, especially airfares, decrease, matching average price in 2019. Director General of the Fiscal Policy Office predicted Thai's high household debt would not have a significant impact on the economy. Household debt stemmed largely from the purchase of real estate and durable goods such as cars and motorcycles in order to create income in the future, making up to 35.1% and 12% of the total respectively. Daily expenses account for 17.9% of household debt. Secured loans, meaning loans backed by an asset such as a car or a house, account for 47.1% of the total, which shows many households incur debt for the purchase of property, not consumption. In the first quarter of 2023, personal debt NPLs declined to 2.67%, reflecting an improvement in household debt. The trend for household debt is improving, in line with the recovery of the Thai economy following the pandemic, which correspond to agency survey results finding improved income from higher employment. In addition, private consumption gained as the Consumer Confidence Index rose for the 12th consecutive month in May, indicating household debt is not having a significant impact on economic expansion. AS Chief Executive said that one of the best ways to tackle chronic household debt would be to improve people's quality of life, which should be a critical agenda item for the new government to drive more sustainable economic growth. He said the current tourism-driven economic recovery is generating revenue streams for the other sectors, though the rate of foreign arrivals is slower than 2019. Bangkok Post encourages you to go to the link in the description of this video for the full story. Thank you, and see you again next time. สวัสดีครับ